I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So we start this week with a look at the daily chart of the S&P 500. What an interesting week it's been. As you can see on the chart, there are a whole lot of gaps that are labeled day after day. Pretty much we've had 5 days in a row, more or less, where the market has gapped up, and those gaps all remain open. Quite an unusual situation, and I think extremely unusual considering what many were expecting to happen around the US election. Many thought that if Joe Biden got elected as the president, that would not be so good for markets, and quite apparently that's been the opposite reaction. The markets have been absolutely on a tear over the last week. And then, of course, yesterday we got the news breaking that Pfizer have come a long way and made significant progress towards a COVID-19 vaccine. And that was what propelled the market even higher at the open yesterday. You can see the S&P 500 gapped out through overhead resistance, traded up to an all-time high at around 36.50. And at one stage, the market was up nearly 4% on the session, but it gave back a great deal of the gains into the end and ended up just over 1% higher on the session. So what you end up with is that very ugly looking bearish candle at the top with a long tail to the upside. And that is a shooting star candle that is formed on the daily chart over there. That's not typically what you want to see when you see a breakout. Often you'd want to see a breakout that ends on the session high and continues to propel higher. So a little bit concerning that we've seen that fading of the strength throughout the top of that range there. We'll see how the market opens when trade gets underway today. Futures are indicating a slightly lower open for the S&P 500 at the time of recording this. So that might see the market pulling back into that initial gap. That comes in at around about 35.25. If we move on to the hourly chart of the S&P 500, all of these levels become more clear to see. So there you can see yesterday's big gap up, and then you can see the significance of that 35.25 level. That was the previous highs that we saw into the end of last week, and that area would be the first zone of support to watch. If that fails, then the next area of support would be down at about 34.80, where there's another gap. So we need to keep an eye out for that. But the fact that the market did fade that big move to the upside yesterday is somewhat concerning and suggests that maybe there is some consolidation lying ahead. And would not be unsurprising to see that, given the swift move that we've seen to the upside following the election, and then obviously yesterday's massive move up and reversal on the back of that COVID-19 vaccine news. Then let's take a look at the chart of the Nasdaq 100. Similar looking setup here. You can see again the market tried to break out through the upper end of a broad triangle pattern that has been evident over the last 3 months. It was unable to follow through to the upside, however, and we saw a very big bearish engulfing candle form yesterday. Again, not the type of trading action that you want to see following a breakout, and it does beg the question whether that becomes a false break now on the Nasdaq, and whether we start to see the price coming back and trying to target some of those lower gaps that are indicated on the chart over there. If we take a look at the hourly chart of the Nasdaq, here you can see it more clearly. So what's significant is the fact that the price yesterday pushed up through 12,200, which was the previous high from the middle of October. The price was unable to sustain a move through that prior high, and it's come back quite hard and faded the big gains that we saw at the open. Now, yesterday's opening gap was closed, but there are further gaps down lower at about 11,300. That's where a breakout occurred above that downward trend that you can see on the chart there. So I'm not sure whether it goes back as far as that, but this trading action does suggest to me that we might see a little bit of consolidation ahead in the week to follow. And then that consolidation perhaps gives us further clues after that as to whether we see the market making an attempt at new highs again, or whether it actually comes back harder from that level or not. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.